Good morning, everybody. It's Monday, April 21st, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets are at May corn up 3 at 485 and a quarter. May soybeans were up 3 3/4 at 1040 and a quarter, and May Chicago wheat was up 2 1/4 at 551. No export sales announcements here this morning, so we'll jump right in, guys. Hope everybody had a nice Easter. Notice last week we did see a significant fund action buying corn, beans, bought a little bit of wheat as well. And then looking at outside markets here this morning, the dollar continues to tumble. Outside markets are down about 360. So with that, Dustin, maybe a few thoughts here to kick off the week, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, I think the main thing, I know we talk a lot about currencies on this show, and you still look at things like gold and silver and all hard assets. They're telling us something still. I would just not be surprised to see just underlying bid for support. Who wants to be short hard assets right now ahead of a major growing season? I think we make seasonal highs April, May, June for a reason. So while there's risk the market can go down, I still think that a lot of there's a lot of tailwinds actually right now to maybe keep some opportunity open for the next couple of months to sell.
Very good. And anecdotally, we've heard kind of some northern parts of Iowa and whatnot is making some pretty rapid progress in terms of corn planting, at least towards the end of last week. Dustin, I think you were talking to guys out there.
Yeah, no, I think I don't expect it to be like any sort of a delayed year, right? I think a lot, like ever since 2019, I feel like every year people are like, oh, we did not get this planted in time. And even in that year, we still had a market break after it's done. So, there's 20 million prevent plant acres, but it seems like that kind of jolted everyone to worrying about not getting it in on time, or, that being a potentially bullish thing for the market. And that's never been really the case, right? We can plant half the crop in a week nowadays. So I don't think the market actually has any premium built in about the risk of it not getting planted. I think the premium comes from, what does the June forecast look like for July? That's where, if it's nice and we've got plenty of moisture going into mid-June and the extended forecast looks good, the market starts to break. Generally is the case. It's because there's a certainty that we're starting to receive. So that's not going to be, I don't think, a big market mover of the planting pace, in my opinion. Sure. Justin, do you disagree with that? I mean,
yeah. I think Iowa talked to several growers that are almost done, corn and beans. Beans is kind of the crop now that people plant first in a lot of areas because you're seeing the yield benefits of planting early beans. I agree. So talking to even our farm, we got most of our beans done. We got some rain, decent rain the last couple of days. It's a pretty wet forecast. So a lot of guys are kind of rushing to get stuff in before the rains. Obviously, as you go south and east from Iowa, it's quite a bit wetter. So they're having some issues down that way. So I agree. I don't think there's really much premium, for any planting delays, and I don't think there necessarily should be. To Dustin's point, we can just plant so fast anymore. A lot of guys have high-speed planters, multiple planters. Probably why cost of production is so high for most growers. We're probably over capable of planting fast. I agree, Dustin. I think I wouldn't even say a premium. We beat the hell out of everything. We're way below cost of production. To Dan's point, the dollar's making multi-year lows. Gold's making, forever highs. I just think you look at a 4 handle in corn and, $10 beans. I just think you're at a price you don't really want to press right now with all the government programs, crop insurance, all the things we talked about until you know more about the crop. So And these, there's just so much going on. These trade negotiations, what's going to happen there? It's just like it's just a really, if you put a gun to your head, right, just a really tough spot to make a strong line in the sand here on prices.
Justin, any thoughts on the fund action? I mean, their opinion that starting to ramp back up. I think they're kind of for this time, a pretty big long position in beans is what they're starting to build. As we look at the calendar.
Well, I mean, it's not like we don't have burdensome stocks. I mean, we're relatively firm in old crop corn and beans. Now you can argue that the carry out for beans will go up a little bit with the, China kind of backing away and everybody focusing on South America for exports. Corn's still pretty tight, obviously. Where our export pace is above what the government's estimating, and we have a tight carry out already. Now, South America has gotten some decent rains to help with safrinha crop, so that will eventually shift over. But again, we're forecasting above a 180 yield and a 52 bean yield to get carryouts up a little bit. We still have to grow the crop, and we've had just a hard time. We just had a hard time recognizing anything over 180 in corn with some really good growing seasons. We've had some, maybe not perfect endings where we've been dry in August last couple of years, but we've had really good growing seasons, and we've yet to print a 180 yield. So to kind of start there, I think is just a really tough thing for the market to accept. So we're not really far from pretty friendly numbers. We could take the government numbers and just say we're gonna have a record yield and everything will be okay, but the market has to naturally build in some premium because that's just hasn't happened.
Sure.
Yeah. And Dan, I think you're talking too about like the funds liquidating their shorts for beans last week. They both corn and beans about 75,000 contracts, 75,000 plus for beans. And that's a big number for a week over week change, right? That's the one that's been kind of lagging. They were quicker to buy corn here when they started to get long corn. They're much slower to get long beans. So in a 1 week change, that definitely is one probably newsworthy thing to talk about. If the funds are going to build that, beans are pretty weak to corn. And to Justin's point about corn being a 180, having a hard time going above 180. Beans forecasting, at their number 52, I think that's also a questionable number as well. Mm-hmm. And if we're getting it in a timely fashion in Iowa, what's the chances that we're gonna keep to that 95 million corn acreage number? If that leads to less beans, less double crop beans with a low wheat number, it could be it could get pretty interesting for beans. How quickly since I've been in this business, at least it seems like beans have this huge carryout projected, and all of a sudden we're sub pipeline at the end. And a lot of that's been due to Chinese demand, which is a big unknown right now. But in the small chance that like something positive does come out of the U.S.-China trade war, that could be extremely bullish beans with the setup that we have right now. So I agree. This is an interesting time. I'm not surprised to see the funds start to get long again.
So, the 200-day moving average is kind of where, kind of the old school, trend, right, line, right? So if you're trending below the 200-day, you're in a bear market. If you're trending above it, you're in a bull market. So if you look at like November beans, for example, we haven't been able to really be above it since last May for like a year. We've kind of touched it. We're at it right now as we're talking. So you start trending above some of these things, like that's a long time that it's been under, and the funds have been kind of sellers or generally on the sell side. So those are, interesting time of year, interesting price level, interesting fund action. I'd say if you start trending above that, you kind of be open-minded to what, they might want to do, especially with the dollar doing what it's doing. Right. I mean, the dollar's lost so much value that, you talk about, Dustin, a lot about the real. If you look at just dollar terms for the rest of the world, we've gotten a lot cheaper, even staying flat. So,
and Justin, too, one thing to keep our eye on, and there's just been kind of rumors that we may get those standards on the renewable fuel numbers this week too, which will be interesting to see. I mean, we've seen oil react pretty good every time they've hinted at it. So
yeah.
We'll
I mean, that's the thing is like, we're, but, if you get some of those kind of things done, our crush capacity is there, right? So we can really ramp up. We've seen what we can do in a month with beans, well over 200 million bushels, right? So it'd be nice if we had that, keep crush, strong like that. And I think it's good for everybody. I think it's good for feeding margins, right? You keep meal pretty cheap. You've got lots of DDGs. If you come up with some E15 things, and we'll use a lot domestically. So.
Yeah, I wanted to point out one thing too with the dollar, just because this is such a big move. To your point, Justin, I think people it's happened pretty quick too. Like we don't want to discount this. This is the weekly chart of the dollar. Look at the last 3 weeks. Right, all of a sudden we're into a bear market for the dollar. Lowest we've been since 2022. And these are where I think markets could get pretty interesting and actually quite fun. Is if the dollar, if we start to see the dollar in the low 90s, you could absolutely see dollar denominated assets just rise just because.
So Dustin, what is that? Since basically the beginning of the year, the dollar's down 12%.
Yeah. Right.
So I mean, if you just simple math, right? Like look at beans, like that's $1.20 in beans. If you just think of if we're $10 beans, right? So, we are rallying, but that just could be just mostly the dollar move. If you look at why would funds get into corn, beans, wheat, gold, silver? I mean, this could be a big reason.
Yeah. I mean, look at the last time we were in this range, 21 to 22, right? I know there are other circumstances of why we were at those higher prices back then, but that was definitely the last time I would say anyone felt that this is a good market for farmers.
Well, it's definitely one of the factors that drives money to commodities is the dollar, right? Yeah. So, and it could be why we saw, periods last week where spreads were weak and prices were going up is because there's, buying, you could see buying just based on the dollar, to bring the flat price of commodities up, but near term, supply and demand might, get farmers to sell, drive away buyers. That's why you can get spreads to be wide in a rallying market.
Right. And talk about driving money towards hard assets, commodities, the benchmark commodity gold. This is gold over that same time frame, right? Just an insane move for a hard asset. And I know that it's going to have a much different reason for why people buy gold than corn and soybeans, but they both are dollar denominated. And, we talked about this a lot ad nauseum over the last year, which is eventually this extra 25% of money that was created during COVID, right? We expanded the deficit so fast with extreme, helicopter money almost being given out. Is that going to come home to roost at some point? There's a reason why it costs so much to grow corn today. And it's not just because farming's been good. Part of it can be because input costs have also gone up. We're not going to get labor. It's going to be very difficult to get labor costs back down again, for example, unless you have a major recession. So I would say that's the main caveat to this whole argument is recession definitely would probably hurt everything, including things like gold and corn and soybeans. But otherwise, I think there's a lot of tailwinds.
Yeah, I agree.
Very good. Ryland, welcome back. Looking at Thursday's cattle on feed, everybody wants to talk about placements, but maybe give us your 2 cents and talk about what you see for the week ahead.
Yeah, naturally, that's where the focus is going to be, right? So, I mean, overall, they came in just slightly above estimates. Some guys, it seemed like some analysts were looking for a 104 kind of number, but generally, I think 103.7 was what most guys were looking for, and we got a 105.1 number, so just slightly above. Marketings were also above estimates, and on feed inventory is pretty much just right in line. So overall, maybe you got a little bit of an ostensibly kind of bearish report just from that alone. But I think the real focus really is going to remain on near-term cash. I don't think there was a whole lot to deduce from this report. I mean, overall, you've seen some chatter of the heifer inventories, coming in slightly below last year. So, I mean, I think that could be a number of factors. I think the market's going to be really sensitive to looking and digging for those indications that we're starting to expand, they're starting to retain heifers. But I think there's still a lot more that you kind of need to know before making that determination whether that's going to be happening or not. So that's going to be a focus, I think, going forward. But overall, the cash trade was really good. I mean, we saw 4 to 6 higher last week, 212, 214 generally in the north, saw 210 in the south. So all in all, pretty good news coming in. I think still kind of feels like there's more of a bull spread kind of mentality going in, just kind of staying along the front, short the back, just from a speculative standpoint. So we'll see. Managed money has been liquidating slightly, 11,980 contracts coming out. I think that was expected, just judging by the price action. But now we're right back up. We're back over the 25-day moving average. We're over all the longer-term moving averages. So I think just a lot of question how cash is really going to shape up this week. And I think there's a little bit of optimism going in, but obviously a little cautious just today, just because of the report. So we'll see how that kind of stacks up. Hog market, obviously, I think we want to see some seasonal optimism. I think we want to see the forecast start to improve. We rallied all last week, and just how it looks, cash market's been really firm. Carcass was up 422, a big jump in bellies. So I think this may be an indication that we're seeing a little bit more of that seasonal demand start to shape up, and maybe we are even seeing some of the headline trade dissipate a little bit. But that's always a coin toss, just what's coming down the road with tariffs and trade negotiations. So hopefully we get some better idea of what the deals are looking like this week. But generally, it looks to be a little bit on the optimistic side going into this week.
Very good. Appreciate the update there. We've got just coming into the market here. May corn 3.5 right now, 485 3/4. May soybeans about unchanged, 1036 1/4. And May Chicago wheat's up 2 at 550 3/4. This afternoon, 3 o'clock Central, we'll get crop progress and conditions. So we'll take a look and see how we're moving along there. Talk about it in the war room tomorrow morning. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. Keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every morning that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.